Hey traders, this is Jeff from ZenTrader.ca, and this is a video about why I shorted gold at the close today when it seemed like everyone else was buying it, euphoric on the move, and maybe I'm wrong. It's a trade. I talked about this particular trade over the last couple of weeks and what I was looking for. I was looking for the RSI on the daily to get up to the 60 level, and I actually had shorted NEM here and covered down here, and I thought that was going to be it, but I think today's move is the move that kind of tricks a lot of traders, and again, maybe I'm the one who's getting tricked, but I know where I want to get out of this trade. And so I went ahead and shorted NEM and GG. I'll show you those charts in a moment. But the main reason why I think that this is a false move is if you look at just the last 6-7 months, this is a bearish chart. I mean, this move, this exaggerated move, this was like nearly 2 times, I think, the ATR. The ATR is 3.83. The low was 99.81. The high, yeah, this was 2 times the ATR, and a lot of people will point that out and say, well, you know, this is the largest move. Volume was increasing, but check out the ADX. The ADX is pointing down, number one, which indicates that this isn't the start of a trend. This is more a backing and filling period. When you have the ADX down low and it starts to go up like it did here, which was the start of a trend, and like you did, like it went down and it started to go up, and the negative DI was firmly on top, very high. That was the start of a solid trend. The positive DI really didn't move that much, and the ADX is pointing down. So from my studies of how the ADX generally works, this is not really the start of a trend. I think this is more the end of it, and I think that, you know, maybe we go up a little bit more. Let's go back here because I want to quickly go through the charts that I was looking at to short this sector, and I'll kind of elaborate on how I'm going to play this going into next week, because I mean, this is a tricky trade. I mean, we could just continue. I mean, there's a lot of macro news out there. There was a massive down day on the markets, and who knows what's going to happen from a macro perspective over the weekend. We could have a huge, you know, we could have a big gap up on Monday. We could have a flash crash on Monday. Actually, what's interesting is, this is a chart of the Dow. I'm going to go back to those charts in a moment. These are these are the types of chart patterns that severe moves come from. Like, we were down 275 points today, triggered lots of stops. Lots of people are going to be fearful going into Monday. They're going to reopen up the paper on over the weekend. They're going to see the big declines. They're going to be getting their portfolio statements. They're not going to be happy. There's going to be some panic selling coming. Keep in mind, precious metals, miners, mining stocks are still stocks, and they are still at risk in a full-blown market correction. If you go back and you look at the charts from the 2008-2009, the miners fell just as fast. So I've indicated, I'm going to scroll down here, some levels on these charts. I mean, these are little mini bear flags that these chart patterns are forming. Again, there's a little bit more potential upside, but I think that really, if you think about it, I'm short NEM and GG on these stocks, and I'll be looking to add, as long as we just get a little bit more up, I'll probably add positions in GOLD and ANV. This is just my opinion. This is what I think. I feel like I'm in the minority here, but sometimes I feel more comfortable when I'm in the minority. But that's why I don't think gold has bottomed the miners.